Welcome back to Dinar Community, your go-to source for verified updates and strategic insights on global currency movements, especially those involving the Iraqi dinar. Today's episode could prove to be the most significant one yet, particularly if you've been holding on to Iraqi dinar or following the chatter in foreign exchange markets. We're diving into a subject that has generated hope, controversy, analysis, and speculation for years: the long-discussed revaluation, or RV, of the Iraqi dinar against the US dollar. As we speak, attention is laser-focused on Iraq. Financial insiders, everyday currency holders, and institutional analysts are all keeping a close watch on statements from Baghdad and policy moves by the Central Bank of Iraq (CBI). This moment feels different. There's growing intensity in the conversation, and activity is spiking in investor forums and financial circles. Could this be the tipping point people have been waiting for? Whether you're just discovering the potential of this investment or you've been involved since the early days, today's discussion will break down the opportunity, identify the risks, and provide a grounded perspective on what could lie ahead. Let's start with the big question everyone is asking. If the Iraqi dinar does revalue, how much money could you realistically make? This isn't just about dreaming big, it's about financial planning. Understanding the possible scenarios can help you make well-informed choices about your investment. There's no shortage of hype online. Some forecasts suggest instant millionaire status for dinar holders if the value jumps to several dollars per unit. While those figures are certainly exciting, it's vital to understand how revaluations work and what realistic outcomes look like. Financial professionals tend to project more measured outcomes, with rates ranging from 10 cents to around $1.50 per dinar depending on various factors including economic reform, stability, and foreign confidence. For example, even a modest revaluation to 50 cents per dinar could significantly benefit someone holding a few million IQD. But let's not forget, converting currency is rarely cost-free. Exchange fees, taxes, and processing charges could reduce your net gains. That's why a thoughtful approach is essential. So, what exactly is a currency revaluation? In essence, it's a formal move by a country's central bank to raise the value of its currency relative to foreign benchmarks, typically the US dollar or euro. In Iraq's case, the Central Bank of Iraq would issue an official change in the dinar's exchange rate, instantly increasing its value on the international stage. Right now, the dinar trades at a fraction of a cent, meaning it takes thousands of dinar to buy just a few dollars. But if the CBI were to lift the rate to 50 cents or even $1 per dinar, people holding even modest amounts could see large windfalls. For this to happen, Iraq must carefully manage the process. One major reform under consideration is the long-discussed deletion of zeros project, aimed at simplifying large denominations by removing zeros from the currency, making it easier to use and increasing international confidence. For example, a 25,000 dinar note could be redenominated during the process, dramatically altering its dollar value. However, the revaluation process won't happen overnight. It requires immense planning, interagency coordination, and timing. The CBI is already working behind the scenes, and recent public statements have reaffirmed their commitment to price stability and currency reform. Let's walk through a few practical scenarios to better understand the financial potential. Holding 1 million Iraqi dinars at 10 cents per dinar equals $100,000. At 50 cents per dinar equals $500,000. At $1 per dinar equals $1 million. These outcomes are powerful, but they come with tax implications. In the US, such gains are often considered capital gains, and depending on how long you've held the currency and your personal tax situation, you could owe a significant portion to the IRS. Speaking with a tax advisor before any RV happens is a smart move to avoid surprises. Now let's tackle the practical exchange process. Where would you go to convert your dinar into US dollars? Here are your likely options. Major banks that handle foreign currencies. Licensed currency exchange dealers. Reputable online platforms with regulatory oversight. Each provider may offer slightly different exchange rates, conditions, and fees. So do your homework. Compare offerings, read reviews, and only deal with regulated entities. Be extremely wary of scams. Never send your dinar by mail to anyone without solid proof of legitimacy. Stick with established channels and be cautious of anyone promising insider rates. Also, stay alert for possible exchange limits. During the early stages of a revaluation, authorities may impose caps on how much currency you can exchange per day or week to avoid disrupting financial systems. So why is Iraq exploring a major monetary reform now? The answer lies in economic evolution. For years, Iraq has depended heavily on oil exports, but volatility in global oil markets has made that reliance risky. In response, Iraq has made significant moves to diversify. From agriculture and tourism to renewable energy and even carbon credit trading, Iraq is transforming into a more balanced economy. This new economic foundation provides stronger justification for a currency revaluation. On top of that, political progress is being made. The long-delayed oil and gas law, key to resolving internal disputes and attracting foreign investment, is finally gaining momentum. That's encouraging news for financial observers watching Iraq's path forward. Another milestone. Iraq has reportedly cleared its outstanding financial obligations to the United States and is no longer under certain financial restrictions. This positions the country more favorably on the international banking stage. One of Iraq's goals is to attain full Article 8 compliance with the International Monetary Fund (IMF), a designation that would grant the country access to unrestricted foreign exchange dealings. Such status signals a mature and stable financial system, making Iraq more appealing to global investors. Before the Gulf War, the dinar traded at over $3 per unit. While returning to that level may be overly optimistic, a significant upward move is no longer a fantasy, it's a possibility built on real reform. Now, let's talk about strategy. If the RV does happen, what should you do with your IQD? There are two primary schools of thought. 1. Cash out immediately and secure your gains. 2. Hold your dinar for a potential second wave of appreciation. Selling early locks in profits but might cause you to miss out on further gains. Holding longer offers greater upside but introduces additional risk. Your decision should reflect your personal financial goals, risk tolerance, and access to trusted professional advice. Also, make sure your physical dinar is secure and documented. Store it in fireproof, waterproof containers. Keep receipts, certificates of authenticity if applicable, and identification documents ready in case they're needed for verification during the exchange. A final word of caution. Investor psychology plays a massive role in moments like this. Excitement can cloud judgment. Online chatter can inflate expectations. But success depends on preparation, not hype. Smart investors don't chase noise, they follow plans. As of June 12, 2025, the conversation around the Iraqi dinar RV has never been more energized. Economic reforms are in motion. Foreign capital is flowing in. Political will is strengthening. While the exact timing remains unknown, the alignment of these factors has made the RV a more concrete possibility than at any point in the last decade. So what should you be doing right now? Organize your dinar and all supporting documents. Research exchange options and gather fee details. Subscribe to updates from official Iraqi and global financial sources. Connect with licensed financial and tax professionals. Join moderated investor forums that prioritize verified information. In closing, remember this. Revaluations don't reward the loudest voices, they reward the best prepared investors. Whether you exchange tomorrow or wait for years, your success will depend on informed, disciplined action. Stay vigilant, stay informed, and stay ready. Thanks for joining us. Subscribe to Dinar Community for more trusted updates, leave your thoughts in the comments, and share this video with others in the IQD community. Big moments are built on smart moves, and your next decision could be a turning point. We'll see you in the next update.